Hi, this is estate planning lawyer Michael Pevney, and in this video we are going to talk about federal estate taxes. I'm going to give you a brief overview of how they work. But before that, if you are interested in estate planning, please subscribe to this channel for more estate planning information. Ask a question in the comment section. I'm usually pretty good about responding to them. So, federal estate taxes. Some states also have their own estate tax, but California does not. So I'm going to be talking just about federal estate taxes in this video. Now, there is a huge exemption before federal estate taxes kick in. So starting in 2023, the exemption is close to $13 million for a single person and close to $26 million for a married couple. So that means that you can have up to that amount of money in your estate before you end up having to pay $1 towards estate taxes. So we're talking about people that have large estates, that people that have a lot of money. Now, one drawback to that is starting in 2026, that exemption is going to go down. Nobody knows exactly what it's going to be because it is tied to inflation at a number that was set quite a few years ago, and what inflation has been, it probably will be in the range of $13 or so million for a married couple. So it's going to go down and it's going to affect more families. But for right now, that exemption for a married couple is $26 million. So that means that you can distribute $26 million worth of stuff and your estate will not have to pay any estate taxes if you die between now and 2026. And that's the amount of money that you have. Important to remember that life insurance proceeds do count as part of your estate for estate tax purposes. And another thing to note about federal estate taxes is that it's linked, that exemption, that $26 million exemption is linked to gift taxes. So there is a limit to the amount of gifts you can give every year without having to file a return. So, because think about it this way, okay? So you're sick and you know you're about to die and you have $1 billion. And why not just give away that $1 billion when you're sick and you know that the end is near? And that way, you know that that estate will not have to pay those estate taxes, which, by the way, are very high. They're like 40% after estate taxes kick in, after that exemption is gone. So for that reason, gift taxes exist. Now, you don't have to necessarily pay the gift tax, but once you get above a certain amount of money for a gift, I believe it's $16,000, you have to file a gift tax return with the IRS just to let them know. So what that means is you can give up to $16,000 to as many people as you want, by the way. So this is a way that the wealthy end up giving away some of their money to protect them from estate taxes before they pass away. You start planning things. So if you are married and you have 3 kids and each of them has a spouse, you can give $16,000 to one child. You can give $16,000 to that child's spouse. Your spouse can give $16,000 to that first child. Your spouse can give $16,000 to that child's spouse, and it goes on and on to each of your children and each of those spouses before even having to file a gift tax return. And that also goes for grandkids and cousins, and you can get to a point where you end up giving away hundreds of thousands of dollars a year without getting close to having to file a gift tax return, because that amount of money only has to you can give that money to as many people as you want without the gift taxes kicking in. But once you get over that amount of money, that's when you have to start filing that gift tax return. You don't necessarily have to pay any of that tax, but what it does is say you gave $1,016,000 to somebody in any given year. That means that of that $26 million of exemptions, now that goes down to $25 million because you've used up $1 million of that exemption range. Once again, obviously this is something that's happening to the wealthy, to the very wealthy, but it's something that things are concerned about, because especially we as Americans, we all think we're going to be wealthy, and we think we're going to be ultra wealthy, and that can be a great thing, right? I mean, that's kind of part of the American dream. And that gift tax limit is going to go down. Sometimes I get questions about what's going to happen, and if you can predict the future and what Congress is going to do, I've got a bridge to sell you, and I've got some questions to ask you, because I'm certainly not going to make any predictions about what Congress is going to do if they're going to extend that higher gift and estate tax exemption. So that is a brief overview of federal estate taxes and also how they're linked to gift taxes. If you have questions about this or anything else related to estate planning and you're in California, you can set up a time to meet with me for free by going to ocestateplanlawyer.com. Thanks for watching.